Good morning, everyone, and welcome to the Ankerstar Wealth Market Update. I'm your host, Allison Ankerstar, and today we'll be talking about what Steve learned from his investing conference yesterday, his take on Nvidia's earnings, and last, he'll answer the commonly asked question, when will I get my tax refund? But before we begin, as a reminder, this is a financial education presentation and should not be construed as personal financial advice. Full disclaimer information is available at ankerstarwealth.com. Good morning, Steve. You attend the First Trust Economic Forum yesterday afternoon. Can you share with us some things you learned?
Yeah, you bet. And thank you, Allison, for that introduction. So I went to this First Trust Economics Forum. It was here in Austin yesterday. I do follow the First Trust folks pretty closely because I found that Brian Westbury, their chief economist, as well as the rest of their leadership team, has really been spot on in the past for the past couple of years that I've been working with them. And I discovered them and kind of started following them. And they have these economic conferences on occasion, if you will, every few months, sometimes it's 6 months or so, but they really talk about the important topics like I try to do every morning, the important topics that are out there that are on investors' minds. And these are on professional investors' minds. So where I tailor mine to the person at home, the retail investor, they tailor their presentations to folks like me that are out there and, guardians of people's wealth, guardians of people's net worth, that we're guiding individuals through these situations. So they talk about what they're seeing. And so then I can turn around and use that with client conversations. Apologize for looking down, but I do have a handout that I just want to cover some of the important things that we're seeing that they talked about yesterday. And I think you'll find it very informative. First of all, I talked about COVID. They kind of ran through look at the numbers. We're pretty much past COVID, if you can think from an investing standpoint. Obviously, empathetically, empathy to all those that are affected by COVID. And of course, there are still people passing away from COVID. But as a nation and as an economy, we're largely past it. And that's, all politics aside, just are we going to shut down again? Probably not. It would need to be something horrendous for us to shut down again. And really, they talked about this was an unprecedented move, shutting down the entire economy for a pandemic. So I think that they're making the call that we'll probably never do that again. Let people make individual choices, but then again, you never know. You see what's going on in Canada. The government's being pretty aggressive with the situation up there. And, a lot of people sit around and worry about the aggressiveness of government. And I think that actually will probably be reflected in the midterm elections, but we shall see here later this year. So I talked about COVID and how it's pretty much a non-starter as far as financial, economic effects. They also talked about the ballooning national debt, the $4 trillion that we basically printed in the past year and a half or so to deal with COVID. And of course that caused inflation. There's a lot of people who argue, what causes inflation? It's not necessarily spending, but certainly money printing. When you just increase the amount of money out there, of course things are going to get a little bit more expensive. There's a lot of folks out there calling inflation transitory. They don't believe that. They think it's going to stay at least above 3% by the end of the year, no matter what the Fed does. I do tend to agree with that. I thought it was transitory at the beginning. I have changed my tune. I think it's here to stay. But certainly as things increase in price, it can't continue to increase and increase, right? So there's a point where inflation kind of steps up, and then that's the new normal. If you think of the housing market, as probably the best analogy I can use, say you live here in Austin with us, the housing market jumps, right? And then you have this huge gain, but once it has the gain, it has to kind of consolidate there for a while. So I think we'll see that in inflation. The Fed will make their moves. I'll close with that here in a second, but to combat it, whether that works or not, but the inflation should remain pretty high throughout 2023 and then start to taper towards the end of 2023. What they also made a comparison with is, even though the national debt is ballooning, the percentage to service that debt is actually pretty small, so not as concerning. A lot of us struggle with $1 trillion, and let me use that. They said, who in this room understands what $1 trillion is? And everybody's kind of raised their hand, yeah, I kind of know what $1 trillion is. And they're like, no, you don't. So he goes, this was the CEO's analogy. If I gave you $1 a second, how long would it take? If I give you $1 a second, how long would it take for me to give you $1 trillion? And of course, everybody wrote down their answers. The answer is 31 years. And he goes, that's 1 trillion. We spent 4 trillion. And of course, you look at the national debt as several trillions, right? So it's kind of but he did go through we've done this in the past where we spent money, used kind of the World War II analogy, which I think plays. I kind of struggled with a little bit as far as going, well, I'm not sure that's the same, but certainly there's times in the past as a country we've spent a ton of money to get through something, and then the question is, eventually you retire that and go on. I would like to see us do that sooner than later. You probably would as well. We talked about pre-tax corporate profits are at an all-time high, servicing the debt, inflation, transitory rate hikes are pricing in 6, maybe 7. Even if we do that, and you think each rate hike is a 1/4 point, we would end 2022 at 1.75%. So in the short term, that's unbelievably high, right? Mortgages would be around 5% after hovering around 3% forever. But that's what they're pricing in. It'll be interesting to see if the first rate hike is just 25 basis points, or if they actually go with a 50 basis point hike. While we were in the meeting, the Fed minutes came out, so they kind of popped that up real quick. The Fed meeting minutes, again, from 3 weeks ago, from the meeting they had, that's laid out the clear path to 3 hikes. So we'll see. The market did kind of celebrate that yesterday after that announcement. Okay, last thing we'll talk about is the elections. We talked about the Build Back Better plan and whether that's going to get passed, and if there's going to be any significant tax reform that comes out of it. And pretty much across the board, the answer was no. It's probably not going to get passed. Not even a Diet Coke version of it's going to get passed. So there probably won't be any tax reform coming out of the 2 years of the blue wave. And then going into the election, anticipate the blue wave being over, Republicans taking back a portion of the government and going from there. We also talked about some of the innovation that's out there, and it said even though the market's going to get hit by the raise in interest rates and by the inflation impact, like there's still some amazing things that are going on out there. And he goes, and some of these, if you think back 20 years, were cartoons. It was a cartoon that we could send reusable rockets into space and bring them back. And then vertical farming is another thing we talked about, is taking, farms that are growing traditionally horizontally. And if you haven't seen, Google vertical farming, to be able to take one plot of land, his analogy was San Francisco, and basically farm vertically. So you've got all the room vertically. Now, be able to harvest it and all that. It's pretty, stuff of cartoons. He goes, and now it's a reality. So that was, 15, 20 years ago. This went from concept to reality. So what's going to happen in the next 15 years? So in summary, this was 3 hours worth of information. I only scratched the surface of it, but what it helps me do is keep an eye on the big picture for you. So as we, tailor your investments to what's coming versus what's right now, which is the common tendency is to look short term. Think long term. Technology is still where it's at, and that's what I have from the conference from yesterday.
Switching to earnings, Nvidia released earnings after the bell yesterday, and the stock is down 2% overnight on the news. What's your take?
Well, Nvidia is a fantastic company. There's no doubt about that. They're a chip maker. They're either the best or one of the best. You could always argue that, but they're certainly a major player in the space. So when you have Nvidia missing earnings, I will say that there's a lot of tech firms that have, they didn't miss earnings, excuse me, they released earnings, they beat earnings, and the stock still dropped. And we'll look at their chart here in a second. But I will say that in the middle of this sell-off, and I have this conversation a couple times every day with somebody who's like, you know what, I think I'm getting close to being out because this is never going to end. Well, it seems like it. Remember, stocks are those things, just like anything else. You want to buy them low and then sell them high. Well, you're getting that opportunity, right? We get these on occasion, and a lot of people decide to sell during the time when they should be actually buying. And then money tends to, hit all-time highs, and here comes a bunch of new money, and it's just like, well, thank you for your trust and confidence, but tag on it. The time to buy was 3 or 4 months ago when I was saying it's time to buy, right? Now you're at that time to buy. And when you look at the analyst calls, that's why I brought this up, is you can see, the big names, I love Apple, Home Depot, Disney, DraftKings, I'm largely out of, even though we took a fantastic ride on that. And you see Nvidia right here, if it's small print for you, down 2.7. But when you really look at these are great companies. Dick's Sporting Goods, buy. Home Depot, Lowe's, overweight. DraftKings, overweight. I think that's a crowded space, so I'm staying away from DraftKings for a large part, unless you're up in it and just don't want to pay the taxes because we took like a 4x increase. Apple is a buy. That's the biggest no-brainer in the market. There's a downgrade for a company I'm not familiar with, for Atlantic Equities. Yum Brands outperform. Disney, buy. Cisco, buy. Monster Beverage, market perform. Dollar Tree's a buy. There's a downgrade to 3M. Okay. Shopify, neutral to buy after the big sell-off from earnings this week. Meta Platforms, the old Facebook, that's a buy. Upstart Holdings just had their quarterly earnings, buy, and then they close with Nvidia as a buy. So I really do think, it's kind of crazy how much these companies have sold off. So let's go to a 3-month chart. 6-month chart's probably more informative. So we've had the big run up. Here was the end of the year. A lot of new money came in right here, and now it's down, especially if it went into technology. But overall, I think Nvidia is a screaming buy, and I'll be buying more today.
Last question. It's tax season, so many people are asking, when will I receive my refund? What's the answer?
Right. Where's my refund, Steve? Well, Steve doesn't run the IRS, right? Nor am I a tax professional, but I get it. I work with you every day on financial issues. So of course, that's one of them. So to back it up a little bit, when should you file is probably the better question. You want to make sure you have everything before you file. If your financial situation is fairly straightforward, then once you're sure, you can go ahead and file and get your refund if you're due one, or pay your taxes if you're not due a refund. The more complex your situation gets, i.e., it's not necessarily one for one on whether you have more money, but certainly if you are off into private equity, or you have anything that's given you a K-1 form, or you just have more advanced sort of stuff, you tend to get your forms later. Everybody should have theirs, except for Schwab is not out with their 1099-Bs on all their accounts yet. So we're waiting on those. Literally should be today, maybe tomorrow, but early next week at the latest, because they're all over that. But once you're sure you have your stuff, then you file. The second question is, why are you getting a refund? Right? You want to probably save a little bit more than you owe, so you get a little bit refund back. But the national average I read this morning is $2,775. That's $2,775 per person across the nation of a free interest-free loan to the United States government. You're like, what? And I'm like, yeah, that's what you're doing. You're giving your money to the government. They hold it for you interest-free, and then they give it back to you, a year later when you file your taxes, right? So remember, you can manage that through your W-4. If you don't have any questions on that, consult a tax professional or just reach out to me. I can explain it. No big deal. The last piece. So when do you get the refund? Well, after you file, it's down here at the bottom. 21 days is the official answer. I tend to not file till April 1st because I don't want some corrected 1099 to make me file again. And I've seen that. 21 days is the official answer, but 24 hours after e-filing, again, is when you can actually log in and check your refund status. So if you need this money to pay the light bill, then file when you need it, and you can check your refund status here. I've never done this process, but I would imagine, probably like tracking a package or anything else, right? They'll give you a pretty good idea of when you're going to get it. So overall, I would say, file when you have your stuff, but you also run the risk of filing an amendment if you file too early and then have to go back and make a correction.
Thank you, everyone, for your questions. Please submit your questions as a comment through social media or directly to our email at vipservices@ankerstarwealth.com. That's all we have for today's show. I'm Allison Ankerstar, and we'll see you back here tomorrow.